Hello and welcome back to another video. In today's video, we're talking about everything to do with central bank digital currencies. You may have heard a lot about them recently. You may have heard a lot of talk about CBDCs and what is going on in various different countries and jurisdictions. So we'll be touching on all the most important aspects of CBDCs in today's video. But before we dive into the content, as usual, please drop a like below on this video. Give it a thumbs up. It really helps with the algorithm and spreading the good word. And feel free to subscribe to stay up to date with all of the latest content and videos in the crypto and Bitcoin space. So without further ado, let us jump into the topic of today's video, which is everything to do with CBDCs. So right off the bat, what is a CBDC? A central bank digital currency is a digital token similar to cryptocurrency, but issued by a central bank. And central bank being the core takeaway when it comes to CBDCs. If you've been in the crypto space for a minute, you will know that decentralization is the core thesis and everything that Bitcoin is based upon and built around. So the very nature of a centralized bank digital currency is the antithesis of what Bitcoin is and what Bitcoin represents. So much of the debate and much of the maybe fear and the dark side of central bank digital currencies stems from the fact that these are digital versions of existing fiat currencies, and we'll talk about some of the downsides in a few minutes, but the very nature of them being centralized and issued by a central bank means that they're essentially just a more digital version of the existing fiat, like the US dollar, like the euro, like the Japanese yen, etc. So for all of the scary stuff and dark side of CBDCs, there are some benefits that we can list. However, you will notice that most of these benefits are not for you as a consumer or as a public individual. Most of these benefits, if not every single one of them, can be directly attributed to a benefit for the banks and the central banks that issue these digital currencies. So faster and more efficient payments, reduction in transaction costs, increasing financial inclusion, potentially an argument there that, these CBDCs could help the unbanked, but that's more of a narrative that Bitcoin has been helping to do that over the past 12, 13 years of its existence. Higher level of traceability and security for banks, reducing the risk of fraud and reducing the risk of money laundering. So most, if not every single one of these benefits you can see are more aligned with benefits and advantages for the banks themselves. None, you could argue, financial inclusion here is a benefit for, the average layperson, but realistically at the end of the day, yes, CBDCs are beneficial, but they are just beneficial for the banks and the entities that are going to be issuing these in terms of helping them reduce their costs further. It'll be interesting to see if those cost reductions get passed on to lay people, but we can see how the benefits of CBDCs are heavily skewed towards the banks themselves. So as we've touched on already, the centralized nature of central bank digital currencies means that they are essentially just a digitized version of existing fiat currencies, whereas Bitcoin, having decentralization as one of the core pillars and core technologies of the underlying network, is, the complete opposite end of the spectrum. We have triple entry accounting. We do not need to really rely on centralized intermediaries for conducting transactions on the Bitcoin network, and as is the case with many other blockchains. So again, the traditional financial system and CBDCs go in the same bucket here with CBDCs really just being an extension of the traditional financial system. So how do we compare CBDCs versus Bitcoin? Again, we've touched on a few of these points already, but with CBDCs, obviously, monetary expansion and unlimited supply is one of the core components here that is a significant difference to Bitcoin and decentralized currencies. You know, a lot of them have limited supplies. Some of them obviously have unlimited supplies, but comparing it directly to Bitcoin, you know, Bitcoin has a hard supply limit of 21 million Bitcoin ever. CBDCs are obviously centralized versus the decentralized nature of Bitcoin that we've just spoken about. Clear monetary policy with Bitcoin, opaque monetary policy with regards to CBDCs, you know, variable rules determined by a centralized group of people acting oftentimes in their own best interest. CBDCs are closed and permissioned. Bitcoin is open and permissionless. It's an open source software. You know, we've got anyone can contribute to the code base if you are proficient in doing that. And, you know, it's the opposite end of the spectrum versus CBDCs. Risk of seizure, privacy invasive, and enable censorship are three of the big kind of dangers that are painted around CBDCs. And, you know, there's some legitimate concerns there that we'll come on to in a minute, but the whole idea here is that Bitcoin has created this completely new paradigm of permissionless, decentralized ways to send money between two parties without the need for that centralized intermediary. So the essence here is that when more and more people begin to realize that, you know, there is serious problems with some of the dangers of CBDCs, the game theory and the network effects of Bitcoin continue to play out over time. And as the network continues to grow, those network effects just get stronger. So what's happening around the world already with CBDCs? We know that in a number of different countries, there are initiatives already underway. There's a lot of planning in the EU as well with regards to the research and testing of CBDCs. So this map in particular, what we're seeing is about 60% of central banks are now conducting pilots or proof of concepts with regards to CBDCs. So all of these areas in this kind of lighter brown are, you know, in the process of conducting research around CBDCs, and the pilots have even started in a number of countries like Brazil with the digital real. We've got an e-krona in Sweden. We've got the e-Chinese yen. So, you know, there's a lot of markets and a lot of countries and jurisdictions that are already piloting their versions of central bank digital currencies. And, you know, this does not get a huge amount of press right now. And it's interesting to think about the coverage that is happening on this topic, and, you know, whether these CBDCs will be ushered in with, you know, with any kind of force or any kind of not giving people the choice of whether they have to use them or not. There's going to be a lot of interesting developments over this in the next few years. So I think the dangers of CBDCs is something we've touched on briefly already, but ultimately, there's too much centralized control, as we've seen. The centralized parties in the central banks are the ones that are calling the shots. There is no decentralized nature of CBDCs. Privacy concerns and government overreach. You know, what's going to be happening next? What's going to be tied to these CBDCs? They have the ability to see all your transactions. They have the ability to potentially attach your identification to your blockchain ID and have that tied to your bank account. And, you know, will there be too much government overreach when it comes to the way that you spend your money? You know, because of the nature of blockchain technology, obviously everything is recorded on the blockchain. But when you have a permissioned blockchain where only a handful of actors can see what's going on and take action based on things that you do in your everyday life, then, you're putting your fate in the hands of people who may not have your best interest in mind at the end of the day. So, could we be seeing things like asset freezing, transaction control in future when your government decides that, okay, they don't like the way that you're spending and they don't like what you're spending your money on? Can they freeze your assets? Can they take control of your transactions? Can they link your identity to your money and take action to prevent you from doing certain things? So the impact on individual financial freedom and privacy is, it's at jeopardy here. There's a lot of moving parts, but ultimately what this could turn into is some sort of Orwellian future where you're putting your fate in the hands of your government or in the hands of central banks who are seeking to control more and more of the money supply. And linking that to CBDCs is possibly not in your best interest. What is the alternative and what is the future? Decentralized finance has been, in the works for a number of years, and a lot of the DeFi projects that we see here on the screen are creating this entirely new ecosystem of decentralized finance that has been breaking away from the traditional financial system in many ways. But ultimately, I think, there's going to be ways for bridging the gap between the traditional financial system and this DeFi technology in the next couple of years. So we've got projects here like Aave, Yearn Finance, etc. And, essentially what these protocols allow is allowing you to spend, earn, and loan money in a digital way, but using your assets and using blockchain technology for doing that. And with Aave, for example, you're able to take out a loan, you have a fixed rate, you have interest that you pay on that loan. So, these protocols are creating the alternative financial system in a decentralized fashion that is not controlled or manipulated by any centralized authority. So what does the future hold? It's very hard to predict. I think that ultimately, we're probably going to be seeing a future where CBDCs and Bitcoin and a large number of, blue chip cryptocurrencies are working in tandem with CBDCs. But does there come a tipping point where the people have to choose one or the other? I don't know. But I think the game theory and the network effects of Bitcoin as it continues to grow only serves to strengthen the position of, Bitcoin and the entire cryptocurrency ecosystem. Of course, central banks and governments will push CBDCs as, revolutionary technology and a great alternative to Bitcoin and other crypto assets. But they have to, because they now understand the technology of blockchain and they understand the power of it. And they're at a crossroads with regards to how they need to evolve, how they need to adapt, and how they need to try and disrupt this technology. And ultimately, they're scrambling to do that. And CBDCs are the best answer they've come up with to that right now. But I think we see a future where both exist in tandem. And I think as the network effects of Bitcoin continue to play out, we're going to see a heavier skew in that direction. So the choice is yours. You have a choice, and you have a choice to educate yourself. You have a choice to make decisions about your own financial future. But as always, what we want to try and do is give you the information to make your own decisions, to inform how you take action with regards to your financial future and the way that you spend your money. So, as always, if you've enjoyed the video, please don't hesitate to subscribe below. Drop a thumbs up and a like on the video. It really helps the algorithm. As always, we'll continue dropping more videos on all of these topics, and if there's anything in particular you want a video on, please make sure to drop it in the comment section below, and we'll catch you in the next one.